All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session and happy Tuesday to you. As you know, Dale would say it's turnaround Tuesday, but you got to be a little careful today, especially with the Fed tomorrow. Now, I want to talk about something really quick before I get started on the charts. Well, actually, it has to do with the charts, but I wanted to show you something really quick that is kind of got my attention right now. Let's take a look at the Euro Mexican peso. And if you're not in the chat room, I want to point this out just so you guys can see it, because, excuse me, I think this is a pretty important chart as we have a near term double bottom setting up. So this will at least allow for a bit of a rally towards this 2436 level. That should probably be about a 38% retracement. But the reason why this is important, it's not even a 38% retracement, we're still shy of that. But the reason why this is important is because I am long the US dollar Mexican peso, as many of you guys know, but I'm really looking for a breakout above 20. So because the Euro Mexican peso is breaking out, there's a risk, in my opinion, that the US dollar Mexican peso starts to squeeze a little higher here too. Now, I'm hoping that is going to be the case before tomorrow. The thing is we shouldn't break back above like this 2026 level. We shouldn't break back above that unless something crazy happens with the Fed tomorrow. But I think that's a risk between today and tomorrow, is that we get a little bit of a squeeze, because you might end up getting what we call, just a little short squeeze, if anything, excuse me, a little short squeeze that might provoke some buying here in the dollar Mexican peso, just ahead of the Fed, because people might say, well, we've gone pretty far, and how about if the Fed is a little bit more hawkish? Maybe I should cover up some of my dollar Mexican peso shorts. It hasn't gone down as stocks have been hitting all-time highs, yada, yada, yada. So, we are trying to squeeze higher, and we might squeeze up towards, let's call it, there's 2020 right here. 2022 is the 24% retracement. Let's just go ahead and mark that up right now as resistance. I mean, well, first of all, we'll say this 20, then 2022. I'm going to keep it in range. 1978 is support. Okay. So, I mean, we're longer term range bound. We might get a little bit of a squeeze higher today. But I wouldn't expect a lot out of it. It'd be nice if it rallied back to 2020. I'd be really happy with that pre FOMC. I just don't know if we're really going to get too far here today. All right, we'll see. Let's talk about the euro. So the euro is above channel support. That's what makes this 2045, or let's just call it 2050, 120.50, really important support today. 120.50. Resistance 121.20. That's probably pretty key, because if we break above that, we have to turn bullish, because, I mean, it should squeeze if we make it above here. We should squeeze back towards the recent highs, or the 52-week highs. We'll see. Cable. So the cable's stuck. Resistance 139.60. Well, it's called 139.70. This is easy. Support 138.10. Aussie dollar struggling around the head and shoulder top here. Resistance at 78.10. Well, let's just call, we'll call it 78.20. I think that's what we have here. Let me just double check. 78.20, yeah. So we're going to do 78.20. Oops. Support. We're just going to write down 77 cents again. Kiwi. Resistance at 72.62 or 72.60. Same thing as yesterday, guys. There's not a lot of change here. And support, channel support right here, and spike low is going to be 71.45. Now, the dollar Canadian, I'm going to say, has acted horribly. It acted horribly yesterday, and it's just it's trading really heavy. We haven't hit new lows yet, but unless stocks start to turn lower, I think the risk is that we test at least this 161% extension, which comes in at 123.50. Okay, and I do not, and I have it, and I'm long. I do not like it. I'm going to keep us in range right now, but while we're below 124.70, I'm pretty concerned about it. So 124.70, it is just not acting well. And frankly, you think about the dollar Canadian, and neither is the dollar Norwegian krona. And I'm going to skip the Swissy for a second. US dollar Norwegian krona is not acting well either. I mean, well, if you're bullish, if you're bearish, like Steve is bearish, it's working just fine. But you look at, this, it's developing a, bear flag pattern, complete opposite. If you look at like the dollar Mexican peso, which is, I mean, I don't know if it's more flow driven or what, because equities haven't done anything. They're just holding up. And I think that's what's keeping the downside pressure on,
the USD MXN has been more resilient, but don't forget that we also need to take into account the difference between the two economies. I mean, the Mexican and the Norwegian, right?
Yeah,
and monetary policy expectations as well, obviously. And Norway is definitely one of the best at the moment. So, one of the likeliest to become less dovish, because I think it's an exaggeration saying becoming hawkish. Nowadays, there is no such a thing.
Well, one of the things that, and I was talking to somebody about Mexican economy, and a lot of U.S. companies have moved their factories from China to Mexico. A lot. I played golf 6 months ago.
Yeah, I'm not surprised.
A year ago with a guy. He was kind of like our pickup, right? He owns a company that does like remotes for cable boxes. He's got like 350 employees. He lives in a place that he's like semi-retired. It's a public company. Anyway, he moved his factories from China to Mexico about the beginning of Trump's presidency. And that's a pretty common theme. And I think the Mexican economy is, could really benefit in the years to come from that. Now, I still believe that the dollar Mexican peso is very resilient, and has been
It's been behaving in comparison.
yeah, it's been, and that's going to be a risk for anybody that's short if stocks start to come down. But I think overall, you gotta, and same with like the U.S. dollar, Norwegian krona. Even if we get a rally back to, 9, you want to be a seller up there, even if we just get a squeeze up there because of, some sort of market dynamics. But
I think we
anyway,
might also be developing here another symmetrical triangle. I mean, not the so short term that you just noted. No, if you zoom in, to the latest price action, yeah, that last, yeah, exactly, yeah, that one, yes.
yeah, it's entirely possible. I wouldn't be worried about, and I was just talking about how, it is trading heavy. Same with the dollar Canadian. And while we're below, like 840 in the US dollar Norwegian krona, while we're below this 124.70, you just got to be a little careful with these. But also, what I was pointing out is the US dollar Mexican peso is looking good. And so is you got to look at like the US dollar South African rand. It's perking up too. So these emerging market currencies are looking a little weak ahead of the FOMC, which is interesting. 92 cents is resistance for the dollar Swiss. Everybody knows the 92 cents level has been, pretty key resistance. Now we're above this trend line because so much time has passed that we've actually broken that trend line. So it's not, oops, I mean for that. So I think really we have to get above this 92.10. To change anything. I still think that the dollar Swiss support, is this 91 cent, which is basically a 200-day moving average. Not a lot to do here. By the way, the peso is above 20 right now. Just a little heads up. And here's that rand, just so you guys can see. It's peeking its head up against, previous support, should act as current resistance, but we could start to strengthen a little bit here. Dollar yen. So the dollar yen is above channel resistance, and we're pressing that 108.35 previous support that's acting as current resistance. And you look at like the euro yen is at 131, guys. So I'm assuming, you take like the euro yen, we're going to go towards the wedge resistance first. I was telling the guys and gals in the chat room, I think we're going to see this 131.20 level first before turning lower. And you can see that the dollar yen, perking back up. I don't know what to do with the dollar yen, to be honest, because we're sitting here at resistance right now, and I don't want to write down current levels as resistance. I want to give it a little bit more than that. And so if you take this multi-year trend line that we broke, I mean, to get back up to that, I guess it's going to take us back to 108.70. So I guess I'll write that. I'm not, I honestly don't know what to do with the yen right now. And there are times that I'll look at the yen and I'm completely like, I don't know what to do with it. And this is one of those times. So 107.50 remains support. Dollar index, you notice how everything's kind of just staying in range. Dollar index holding this channel resistance. 90.70 will be support. And I mentioned this during the FA.C.E webinar today, but if you recall the week ahead video, and I'll just kind of, I don't rewatch the week ahead video, but I know what I said, and sometimes I can remember, pretty closely what I said. Sometimes, but this one was kind of important. I remember talking about the price action ahead of the FOMC. I was thinking, we had such a bearish close on Friday. We're at the 618. I wouldn't be surprised if we drop a little bit below that, and then recover ahead of the FOMC. And that's kind of what happened. We dropped below the support. We recovered ahead of the FOMC, but you can't turn bullish the dollar index unless there's a reason to, which would be because of tomorrow, which I don't know if we're going to be given any reason to, but I think we need to monitor 91.15 as resistance, because that's going to be channel resistance. And I'm going to just keep it in range. Now, well, let's look at the S&P first. S&P is bullish. Obviously, next resistance is 4208. This is a 261% extension of this move right here. The last actual move lower, where we made lower lows, this is it. So that comes in at, let's just call it 42. It's roughly about 42.10. I mean, I should snap that. $42.11 according to this. So I'll write 42.10, and I would not be surprised if we trade up there. 42.10. Obviously, 41.10 is key support. While we're above that, we remain bullish. Bitcoin has had a surprising run higher, but we are at previous support, current resistance. I think we wrote down resistance as being 56,000, but this is at 55,500. So I'll still write 56K. That's a 50% retracement, but I think we could indeed stall right here. Support today, intraday, would be 51,300. Gold and silver. As you guys know, I'll just write it down again. 26. That's actually 26.70 now. Support 25.60. And then gold trendline support obviously is, this is something we talked about during FACE. We're actually at trendline support. I wouldn't get worried about it while we're above 1760, but obviously if we break below 1760, and it's bullish right now. Next resistance would be completion of this pennant, which would be 1805. Obviously 1800 is capping right now, but if we should surpass that, 1805 would be the next resistance. Okay, so there's your bias chart. It's finished. The good news is you guys got Steve here, and I think Stelios is probably here too.
Nope. I'm
Okay,
here.
Oh, he
Stelios
isn't.
is not
Damn.
here. All right, very, very good. All right, guys. Well, hey, I'm gonna let you guys take over. Remember, tomorrow's the Fed. I don't know how aggressive I would be between now and then. Just be
Lucky
real
us.
careful out there. What's that?
Lucky us.
Yep.
That we have the Fed.
That's right. All right, guys. Hey, I'll let you guys take over, and thanks, everyone.
Bye-bye.
Bye-bye.
Thank you, Blaker. Yeah, I don't have much more to say actually after F.A.C.E from what we talked about there. So we're in a
Me
holding
neither.
pattern. Yeah, we're in a holding pattern, and
To be
really,
frank, nothing has happened since yesterday. I mean, whatever applied yesterday applies today. We ended up by the end of the day yesterday, more or less retracing whatever movement we had, and most things closed the day rather unchanged, at least in the some of the pairs in the dollar complex. The ones that actually moved and didn't retrace by the end of the day were some of the commodity currencies. So Aussie was higher on the day, Kiwi was higher on the day. Same with the rest of the commodity currencies, but having to do with the rest, the pound, the euro, the DXY, even stocks. I mean, stocks ended up yesterday having like a minor up day, but still an inside day to what we had on Friday. So nothing really to write home about. So far today, one of the same. I mean, we were a little bit higher on the day before the session opened. We're now practically unchanged, just fractionally negative. So it's not that it seems like something is about to happen. At least not at the moment. Obviously, this trend line and confluence of supports in the DXY that we keep testing remains crucial. 90, 80 is the level. We didn't break through it yesterday. We haven't broken through it today. But on the other hand, we haven't even rebounded from it. So we've done neither. Having to do with metals, pin bar yesterday, doji so far today in gold. Yesterday, a minor up day, but an inside day in silver. So far today, a spinning top. Platinum, an inside day. So far today, a pin bar. Palladium, on the other hand, had a good day yesterday, closed at new all-time highs. So far today, a spinning top. So basically, so far in the week, we've managed to do more or less nothing. Cryptos remain somewhat in a rebound, having to do with Bitcoin. Ethereum, on the other hand, is yesterday closed at all-time highs on a daily closing basis, right? Not intraday. Intraday, we had seen higher levels, and so far today remains rather well bid. Let's see how long this divergence between the two of them can hold. What is having a very good day today is natural gas. So natural gas broke last week above this rectangle and triggered this double bottom. I had said that the target of that is at this resistance area, roughly at 288. We've now reached that, and we seem to remain very, very well bid. So the chances that another leg higher has started in natural gas have substantially increased. Anyhow, I said many, many times that I believe that natural gas is also going to be gunning for higher prices sooner rather than later, and this seems to be the case as everything else that has intrinsic value. So the question is, what happens from here? And I know it sounds boring, and we've said it many, many times, but I think that we need to remain patient. Because nothing has changed having to do with the status quo. I still see a dollar that is under pressure, very, very close to triggering a big breakdown. Of course, we need to first see it happen. On the other hand, stocks just don't seem to care. I mean, yes, we don't have like a big impulsive move higher, but on the other hand, this constant slow grind higher is just unstoppable. I mean, it's just day in, day out almost. You then get a couple of slightly negative days, and then the market doesn't care once again, and so on and so forth. So we have to remain patient until something different happens here. And we don't yet have a signal that such a thing is unfolding. So that's my little monologue. Let's see if you have anything you want us to look at. Oh, question about natural gas. I did cover that. Gas fundamentals are not great, but gas looks strong. You know something? Yeah, that might be the case, but for me, the most important factor that comes in play is the fact that natural gas remains an asset that has real value and real use in the everyday world. And anything that fits the description I just gave is bound to appreciate against fiat currencies, and especially against the dollar, if you ask me. So I believe that since months ago, we've entered the period that even things that might in isolation not have so great fundamentals should still keep doing decently well, measured, of course, in dollar terms, right? Because it's important in what kind of terms you measure something with. I mean, it would be different if we measured things in gold. It would be different if we measure things in dollars, so on and so forth. Of course, if you decide to measure it with real money like gold, yeah, I don't expect natural gas to do spectacularly, but the vast majority of people, of course, trade it against the dollar, or worst case scenario against the euro, right? So that's the chart we have to look at. Steve, can you look at SBSW? Yeah, absolutely. SBSW. From what I see, we've had a look at it before, and as you see, nothing has really changed. We're trading comfortably within this uptrend contained within this nice channel. We recently broke above this corrective channel contained within the larger channel. And even the recent pullback for the time being has clearly corrective characteristics, right? So, until proven otherwise, I think there is no reason to be bearish here. Yeah, clearly I wouldn't be buying to hold something that has had this massive type of a move higher, to buy and hold. But, you keep looking at the shorter term structure, we get very nice technical formations and buyout break opportunities, right? This was a nice buyout break opportunity. Prior to that, we had several others. If you see, now we're likely looking at another consolidation that has a higher chance of breaking higher than anything else. So, we break above this little pennant. This is another breakout opportunity. We might see another push towards the upper side of the channel, right? So, there is the potential to keep riding the trend until it changes. If you're trading it in the shorter term, in shorter term time frames, there are technical formations that give you appealing risk reward opportunities. But as I said, would I be buying to hold after such a huge move higher with minimum corrections? No, I wouldn't. I mean, I wouldn't be adding it to a portfolio to hold to eternity. Only if I saw a much bigger corrective move lower. But shorter term, I think there's still this is still a very nice technical market, and that's good for trading it. Palladium and Platinum. I actually covered both of them already. Oh, sorry, wrong area. So I covered both of them. I don't have much to say about Palladium. It's at all-time highs. It clearly remains very well bid, and as I've said before, that hasn't changed. The next upside target is at 32.56, the 127% extension of the long-term consolidation that we had here, this symmetrical triangle. So, first area of support, 2,700. I think as long as we remain above 2,700, there's absolutely no reason not to be bullish. Now, having to do with platinum, nothing has changed since yesterday. Not sure where we're at the moment, because I still see two possible scenarios. One, that we can roll over from here and produce one more low and then higher. The other one, that we can accelerate from here and move to the upside. I don't like the way that we've been trading, though, having to do with the second interpretation. I don't know. I don't see the momentum that would indicate that this was the corrective formation that we've already broken above from. So I think we are in some kind of a more complex correction here, and it might need a little bit more time for this to play out before we can see platinum resuming its clear, in my opinion, uptrend to new multi-year highs. Yeah, so yeah, more patience having to do with platinum. That's what I would do. I would still be waiting here.
Our friend Guy is looking for USD Cad.
Yeah, USD Cad. Here it is. So very, very close to the previous low, right? Which is also the 88.6% fib of this whole move higher. Keep that in mind. Momentum has clearly stalled. There is no question about it. I mean, it has waned, actually. It hasn't completely stalled, but momentum has decreased. So that's a fact. On the other hand, as long as we trade now below 126.20, there is no real reason to be bullish or to trying to, time a reversal, because there are no indications of a reversal yet, right? So against 126.20, I think we have to remain bearish. Admittedly, we are a little bit late in this cycle, right? I mean, we can see lower prices, but we're a little bit late. I don't think there is much of a risk reward opportunity to be short here. So it remains bearish, but would I be selling it here? No. Would I be holding if I was short? Yes. Right. So as I'm holding USD NOK being short all this time, it's a different thing though if I would be holding a short position or if I would initiate a new one. So I wouldn't initiate a new one, but on the other hand, I wouldn't be buying it. Not unless we see a break above 126.20. Then we can start talking about a more proper corrective move, which we haven't seen in a long time, right? At some point, that's going to happen. At some point, we're going to see a decent dollar rebound, because nothing moves in a straight line. But we have to remain patient. There is no signal yet that we are at a turning point as we speak, and we're about to turn higher. Oh yeah, you answered that about the rare earth ETF.
Yeah.
CAD Yen, by the way, looks better, as you see. CAD Yen, I think, probably has already played out a corrective formation, and also I'm paying attention to this trend line resistance in the RSI. If we also break through the trend line resistance in the RSI, I think we're looking at higher prices here in the CAD Yen, which has remained in a very, very nice technical uptrend, right? But almost exclusively due to USD Yen, right? Due to the Yen, I mean, which manifests, if you have a look at the USD Yen. Speaking of the USD Yen, the USD Yen has, despite two intraday attempts of breaking lower, which failed yesterday and on Friday, it seems to be holding this 38.2% fib at 107.70 very nicely. So keep that in mind. I mean, it's making a decent attempt to continue higher, and we might have seen the low there. We might. Let's have a look at yields as well. Speaking of that, let's have a look at the 10-year yield. Yeah, as you see, the 10-year yield is not unlikely to have already run its corrective course. So, you know, that obviously, points to a stronger USD yen as well, if that's the case. Definitely the pullback looks nothing but corrective. Yeah, we just worked out the overbought conditions. You can see the RSI reset by coming back to 40 change. I would be careful here. I think the yields are looking like they might be about to start rallying once again, and that would clearly point to USD yen bottoming out, and that would clearly point out to yen pairs resuming their equivalent uptrends once again. So keep that in mind. Okay. Any more questions, guys, girls? AA.
Oh, Alcoa. That's Alcoa.
Oh, it's not Anonymous. Alcoholics Anonymous. Yeah, here's Alcoa. Still playing out in this expanding triangle. I would be careful here. I would be careful, and remember this 40 area is significant, has been significant as support resistance. So yeah, it remains very well bait, so on and so forth. But I would be careful. There is also an alternative interpretation which isn't bullish also, and it's this one, right? I would be very careful here with Alcoa. I think against the 40 area, being so close to it, having such a prolonged RSI divergence, and seeing a potential of an ascending wedge as well, I wouldn't be buying no matter what, right? I think from a risk reward perspective, if I was forced to do something with it at the moment, I would sell it at instead of buying it. I'm not suggesting you should be selling it, because on the other hand, it hasn't done anything wrong. I mean, it remains in a clear uptrend. We keep seeing a long sequence of higher lows. I'm just saying that, approaching that resistance area and looking at this formation and all the RSI divergence, definitely too late in this cycle to be buying before seeing a deeper correction, right? So if you want to own Alcoa, wait. I think you'll get, better prices in the not so distant future. That's my suggestion here. OAUDC. This one? Is it this one? Okay, this is the one you want. Clearly in some kind of a corrective pattern here, and we're getting very, very close to resistance. There you go. As simple as this. This is very simple to read. I think an eventual break higher is in the cards here. But be careful, because we're currently once again very close to resistance. So, buying it just below resistance doesn't make any sense. But this can be a very nice breakout buying opportunity, right? It actually breaks out from this trend line. Probably it will accelerate to the upside. So, for breakout trading type of people, doesn't look bad. Doesn't look bad at all. Okay, so have a wonderful TA. What is
Thank
that?
you.
Wait,
Technical analysis.
also in a corrective pattern. Very, very similar. You see? There you go. Tested resistance yesterday. There you go. I think it looks likely to break out to the upside.
Great. Thank you, Steve.
Okay.
And thank you,
Bye-bye,
everybody.
everybody. See you tomorrow again.
Tomorrow.
Bye.
Thanks.